That's it, Cramer. Keep sending lambs to the slaughter. Oh, I got that tweet right after I interviewed Vlad Tenev. He's the co-founder and co-CEO of Robinhood, the disruptive digital brokerage house that mostly serves younger investors. At first, I thought my critic was talking about how Robinhood had outages on some very big days in March, something I addressed before the interview when I invoked Biggie Smalls' Mo Money Mo problems, and in the interview itself with some tough questions. Oh, but that's not what the guy meant. Nah, I want to trash me. When I get in the meat of the order after confirming Robinhood's trades and account openings that were stronger than ever, well, what were these supposed lambs on average 31 years old buying? That's what I cared about. Turns out they actually like some pretty intriguing stocks. Let's go over the top 10. The most popular is Inovio Pharmaceuticals. I always tell you to own at least one speculative stock, and the younger you are, the more speculative you can be. We've had Inovio on the show. They're one of two companies that have a coronavirus vaccine in human trials. The other is Moderna, another Cramer favorite, with a stock that's up more than 150% for the year. Inovio's up 200% if the vaccine works, with a lot more upside. Ford's number 2, and I have to believe that this is all about bargain hunters taking advantage of a stock that's down close to 50% for the year, and they like these $5 stocks. I think that's a mistake. Sure, Ford, the enterprise, will make it through the period in some form or another, but the stock might be worthless if the company runs out of money. Next is a penny cannabis stock. I don't like penny stocks. They're penny stocks for a reason. The blue chip cannabis play is Canopy Growth, which is backed by the incredibly well-run Constellation Brands. If you want to bet on a Democratic sweep in November followed by marijuana legalization, Canopy. Number 4 is Disney. Oh, I think this one's brilliant. Right now, Disney's getting crushed. No sports, no theme parks, no movies, no cruises. But eventually, we're going to get through this tough period for this iconic company, and Disney stock's going to bounce back. A good buy if you've got a long time horizon, and Robinhood's younger clientele, they got decades. 5 is Microsoft, easy, best performing large cap tech. What's not to like? 6, American Airlines. Now, this is another one where I get the temptation. The stock's down close to 70% from its highs. Big bounce back candidate if the government bails out the industry. And we always bail out the air industry. But United just had to do a gigantic equity deal tonight. Will American have to do the same? That could move it down. I like number 7, Boeing. Again, you have to believe it will be saved by Uncle Sam. The question is, can you get some demand for planes going again? And will the FAA certify the 737 MAX? I think it's a 50 down, 100 up situation. Perfect risk reward for a younger investor. 8th, Carnival. I looked up cruises that you can take, and even though it's got the most tattered balance sheet, not to mention the most tattered reputation, it's still taking customers at incredibly reduced rates for next year. And hey, you can get a refund if the cruise is canceled. I wouldn't own Carnival, if you're my age, no. But if you're 30, it might be worth for speculation. People might forget what just happened. Could happen. Number 9 is General Electric. I own this one from a charitable trust. GE is a fabulous CEO, Larry Culp, and I think it's a better play on the eventual rebound in air travel than Boeing. Finally, there's Tesla. You bet Tesla. I'm surprised it's number 10 and not number 2 or 3. If you're a younger investor, it makes a ton of sense to bet on the only car company that's so popular it doesn't need to advertise. I always say Tesla's a tech company on wheels. To me, that's a fantastic list. All right, not perfect, but very good for speculation. I prefer some fractional shares in wildly popular companies with quadruple-digit stock prices to a penny stock. But otherwise, if this is a slaughter, call me a lamb. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.